and welcome back to the channel. If you're receiving the age pension or planning to apply soon, today's video is absolutely crucial for you. I'm here to walk you through some important changes coming to the age pension system from the 12th of November 2025, changes that could directly affect your eligibility and payment amounts. So grab a cup of tea, get comfortable, and let's break this down together in plain English. Trust me, you'll want to stay until the end because I'll be sharing practical tips to help you prepare. Now, you might be wondering, why is this update so urgent? Well, from the 12th of November 2025, Services Australia is implementing significant changes to how they assess pension eligibility. These changes will affect the income test, asset test, and deeming rates that determine whether you qualify for the age pension and how much you'll receive. For many Australian retirees, the age pension is a vital source of income. Even small changes to the rules can make a big difference to your fortnightly payment, or in some cases, whether you remain eligible at all. That's why it's so important to understand what's changing and what you need to do before the deadline. Let's dive into the key changes you need to know about. The first major change affects the income test thresholds. From the 12th of November 2025, the income-free areas and cut-off points are being adjusted. For single pensioners, the income-free area will be increased, meaning you can earn a bit more before your pension starts to reduce. The new threshold will allow you to earn approximately $212 per fortnight without affecting your pension, and that's up from the current $204. For couples combined, the income-free area will rise to around $372 per fortnight, up from $360. Now, here's what this means in practical terms. If you have a part-time job, receive rental income, or have investments generating income, you'll have slightly more breathing room. However, once you exceed these thresholds, your pension will reduce by 50 cents for every dollar over the limit for singles and 25 cents for each member of a couple. The income test cut-off points, where you lose eligibility entirely, are also changing. From 12 November, single pensioners will lose all age pension entitlement if their fortnightly income exceeds approximately $2,436. While couples will lose entitlement at around $3,725 combined. The second important change relates to asset testing. From the 12th of November 2025, the asset test thresholds will be indexed and updated. For homeowners, the asset-free area will increase slightly. Single homeowners can now have assets worth up to approximately $314,000 before their pension is affected, while homeowner couples can have up to $470,000. For non-homeowners, and this is important if you're renting or living with family, the thresholds are much higher. Single non-homeowners can have assets up to around $566,000, and couples can have up to $722,000 before reductions apply. Here's the crucial bit. Once you exceed these asset-free thresholds, your pension reduces by $3 per fortnight for every $1,000 of assets over the limit. And there are cut-off points where you'll lose eligibility completely. From 12 November, single homeowners with assets exceeding approximately $694,000 will lose all age pension entitlement. For homeowner couples, that cut-off is around $1,044,000. Non-homeowners have higher cut-offs, about $946,000 for singles and $1,296,000 for couples. The third key change involves deeming rates, and this is critical if you have savings or investments. From the 12th of November 2025, the deeming rates used to calculate your deemed income from financial investments will be adjusted. Currently, the lower deeming rate sits at 0.25% and the upper rate at 2.25%. From 12 November, these rates are expected to be reviewed based on current economic conditions and Reserve Bank cash rate settings. What does this mean for you? Well, deeming rates determine how much income Services Australia assumes you're earning from your savings and investments, regardless of what you actually earn. If you have money in the bank, shares, managed funds, or term deposits, these deemed amounts count toward the income test, even if your bank account is earning just 1% interest. Services Australia might deem it at a higher rate. With potential adjustments from the 12th of November, you could see your deemed income calculation change, which could affect your pension payment. Here's what you need to know about the timeline. The changes take effect from the 12th of November 2025, but there's a transition period running through to the end of January 2026. Services Australia will automatically reassess most pensioners between the 12th of November and the 31st of December 2025. Your first payment reflecting the new rules could appear as early as mid-November. Or it might not show up until your January 2026 payment. If you're currently receiving the age pension, Services Australia should send you a letter explaining how the changes affect your specific situation. Keep an eye on your mailbox and your MyGov inbox throughout November and December. For new applicants submitting claims between now and January 2026, the new rules will apply to your assessment. This means if you've been thinking about applying, it's worth getting your application in soon so you understand which rules apply to you. Let me quickly summarise what we've covered today. From 12 November 2025, the age pension income test thresholds, asset test limits and deeming rates are all changing. These updates could increase your pension, decrease it, or in some cases affect your eligibility entirely. Here are my practical tips for you. Check your income and assets right now before the 12th of November by making a list of everything, including your wages, rental income, bank account balances, shares, property values and superannuation in pension phase, because knowing where you stand will help you understand how the changes might affect you. Log into your MyGov account and review your current pension details to make sure all your information is up to date, especially your income and asset declarations. And if something's changed, like you've sold property, received an inheritance, or your investment values have shifted, report it now. If you're close to any threshold, consider speaking with a financial advisor or financial information service officer before the 12th of November, because sometimes small adjustments to how you structure your assets can make a significant difference to your pension entitlement. Watch for correspondence from Services Australia throughout November, December and into January 2026, and don't ignore letters or MyGov messages because they'll explain exactly how these changes affect your personal situation. And finally, if you're planning to apply for the age pension and you're already eligible, don't delay and submit your application before the changes take effect if you want to be assessed under the current rules. Now, I need your help to spread this important information. If you found this video helpful, please give it a thumbs up and subscribe to the channel so you don't miss future updates about the age pension and other retirement topics. Hit that notification bell so you're alerted when we post new videos about pension changes, Centrelink updates and financial tips for Australian retirees. And here's my challenge to you. After watching this video, take 10 minutes today to check your MyGov account or gather your financial documents. Preparation is everything, and with these changes coming on the 12th of November 2025, time is of the essence. If you have questions about how these changes might affect your specific situation, drop a comment below.